Andrew, Harmony, I'll turn it over to you. Thank you all for attending.
Sure. I'll be happy to get started. Thank you for letting us join you today. Even if it were 5 people or just a couple, I would still be glad to be here because condominium water leak issues are sort of one of those things that come up all the time. And when they do, they're never great to deal with. And any information we can give to board members and managers to help you deal with those claims more effectively makes our jobs easier. And I'm sure Andrew agrees with that. Andrew's a legend in his own time in the insurance industry. I have my photo of him on the wall in the back. So I always think, what would Andrew do on these water claims? We're going to go through just a few slides. Neither Andrew nor I really love slides so much, but sort of to prompt and help us talk through some of these issues. Please do put any questions you've got in the chat feature, and we will be happy to take them at the end of it. I'm going to do sort of the first part, the legalese section, and I'm hoping that Andrew will come in and correct me if I say anything that's wrong, and then we'll take on the insurance part. Whenever anybody asks me about the insurance issues, I always say, you've got to talk to the agent, you've got to talk to the expert on this, because these policies are too complicated, and I didn't go to quite enough years of law school for that. So to get started, we're talking about condo water losses. And what are we talking about? We're talking about all of those horrific issues that come up and you get calls late at night. This happened. Some of them are fast, some are slow, but however they happen, they are something you've got to deal with. All right, so today we're going to really focus on when a water incident occurs, who's going to fix it, who's going to pay, and really what to do about insurance. And these are the general topics, but we're trying to focus not so much on fault, but what do you do when you have an issue here? This is not the time to suddenly say, wow, we should have amended our governing documents a while ago. This is the time to focus on the problem at hand and try to mitigate it. Just to make it clear, we're talking about condominiums. Condominiums are a creature of statute. It's an ownership where you own a single defined unit, and that's going to be set out in the declaration or bylaws exactly what you own. So this is totally different from a townhome or a single family home situation. As you'll see through this presentation, condominiums can look like single family homes, they can look like townhomes, or they can look like the more typical high rise we might think you would see in a larger city. There are 2 kinds of condos in North Carolina. We've got pre and post 86 condominiums. The ones that were created before 1986 are going to generally fall under the Unit Ownership Act, and they'll specifically say that at the beginning. And then ones that are created after 86 are going to fall under the Condominium Act 47C. Many of the, let me just start this. Okay. For older condos, many of these have been older apartment buildings. They've been converted over time, and they have a really different statutory framework. And I think it's probably safe to say that North Carolina was a lot less sophisticated with condominiums before 86. And as a result, we have a pretty bare bones statutory framework. The way it was set up, there's no mandatory insurance on the units. There's really limited obligations to rebuild, and it's going to be very, very document specific. So for these, we're looking at things like if there's an obligation to have insurance, it won't necessarily at all include betterments or improvements. It's not going to include personal property that's damaged inside. It's not going to have necessarily anything other than really the common elements. And every once in a while, you'll see a condominium that was set up in a very strange way, which is effectively the shell. Andrew, do you still see those policies?
Yes, they're actually, yes, we see them all the time. And since you let me say something, can I ask you a question?
Sure.
If I'm on a board of directors and I have a condominium that is pre-1986, and I know we're going to get to the next statute, can I vote to accept 47C?
So An association can certainly opt into certain sections of 47C and to alter their specific language about insurance coverage. They don't adopt the Condominium Act in the way you would with the Planned Community Act, but you can choose to adopt language that provides for much greater coverage. And we would always recommend that that be done. And the reason is that if you just have every man for himself, it's extremely burdensome to your manager to make sure that everyone has coverage if that's required. And if not, you're all going to sort of sync together. So it's incredibly important to have that coverage. And we'll talk about it a little bit more later. But a lot of times there is sort of a feeling that people need to insure themselves, especially in some of the older condominiums. And to that, I would say you chose to live in a condo, that you made a fundamental choice to be in it with everybody else. And so trying to limit your liability for larger policies in that context is usually a very short-sighted idea. That's especially true because in these older condominiums, you can't terminate without 100% vote of the membership, and there can be very onerous reconstruction obligations. So if you find yourself with some severe damage that the owner can't afford to repair and you don't have coverage for that, it's going to affect the entire condominium in a really negative way. Again, with these older condominiums, a lot of times we've got boards who have been maybe in place for long periods of time. They've been on the boards for years and have just looked at their coverage from year to year and said, yes, that looks okay. And if you haven't looked at what that coverage is and whether or not it is best practices, that's where you reach out to an agent and say, look, I need to know, do I have the coverage that we need? Is there an issue, for example, even if we're only obligated to maintain and certain common elements, do we have coverage that will bring us up to code if there is that? And Andrew, I'm blanking on what that's called. What is that coverage?
It's ordinance and law.
There it is.
Ordinance and law coverage.
Okay. And that's an issue I had to come up with a client very recently, realizing they didn't have anything like that. And this condo is going to take a lot just to build back what the association would need to do. Okay, for newer condos, and we are seeing these in the Charlotte area just popping up everywhere. We've got everything from the stacked units to more of a townhome type. And I think this is a picture of the Tremont condos here in Charlotte near my office. They're multi-story, but they're basically like townhomes right next to each other. I think the legislature got it together when the Condo Act came in place and said, we need to put forward a better strategy for making sure these units are covered. So with 47C condos, you've got mandatory insurance if there's on the units, if they're stacked units. You've got a mandatory obligation to rebuild. And then you've got some specific language about other coverage that you can or cannot have. And I wanted to break out this two things here. First of all, where the obligation to rebuild is really separate and distinct from the availability of funds in some cases. So if you look at the statute, it's going to say that if there is a water leak in one of these stacked condos under 47C, the association has a responsibility to come in and rebuild after a casualty loss. And to the extent there are not proceeds available to cover that, that's going to be something where the association is looking to the membership to recover that as a common expense. Now, there can be language in the declaration, and the Condo Act does allow the association to pass that cost on to individuals if it's allowed in the declaration, but it's not necessarily the case. So you want to look at what your language is and see, is there an ability to do this? Because the association is going to have to get started on reconstruction before this coverage issue comes into effect. And that's an important point too. If there's a water leak, these things don't get better over time. Time is never on your side, and sitting around and taking the weekend or a week to call a board meeting and decide what to do, it's going to result in significant additional damage. So that's when we want to act quickly, get somebody out to remediate. Don't worry if those big fans cost $500, that they are going to cost a lot less than the rest of it. And that just really needs to be done.
That's right. As you mentioned that, remember that every insurance policy has a duty to preserve property. You have to take immediate steps to stop the water and remediate it as soon as reasonably possible.
Andrew, how far do you think that goes? Does it go so far as the owners or the association need to move all the furniture out if it's going to be compromised? What about that?
Well, one of the things in regards to, you said furniture, so that's a very distinct thing, and we'll get to the furniture coverage in a second. But if that water is running, it is time to, you have to treat it like it's on fire. It is just as damaging. Fire, of course, is life-threatening, so I'm not equating that. But the damage to property is as severe with water. So it has to be treated just like it's on fire.
Yeah, and I asked that because I had a case where there was a significant water leak and a lot of really heavy furniture that was left inside on the floors. And we got into an issue with the carrier later because we hadn't moved that out. It was holding water into the floor and basically making the problem worse. And there had been discussion of, you got to get the stuff out of here that's packed. There's no real ability to come in and mitigate. And there was a demand that, I think, to be able to reduce the damages because we hadn't done that.
In that regards, it was a special situation, but normally the association and the insurance has no duty to any personal property that is inside that unit, has no duty to the unit owner or tenant to put them up while they're displaced during a type of claim. But if there is a certain situation that, hey, if we take this proactive measure, even though it's personal property, to preserve property or lessen the damage, then there's an argument there that is in the benefit of the insurance company to lessen the claim to have that included.
Right.
And that should be argued.
Okay. And as you see, I'm asking Andrew these questions too. I mean, there's so many nuances here that have to be addressed on a case-by-case basis. Another important issue here is the language in the statute, to the extent reasonably available. There are situations where we simply cannot insure units or in condominiums for different reasons. I've got a condominium at the coast that was so heavily damaged as a result of Hurricane Florence and has still not been reconstructed all the way, that they had an enormously hard time finding coverage and in fact could not secure all of the coverage they were required to have. It was just, it went from $500,000 in a year to $1.5 million for a policy. And my understanding, and Andrew will correct me if I'm wrong, is that you're seeing these condo policy costs just leap up over time, and some of these premiums have just gotten astronomical no matter what our agents do to try to get us the best rates, right?
Yes, absolutely. And we're going to spend a lot of time later in this presentation in regards to deductibles and things to do to help protect the loss runs, but absolutely a condominium can become uninsurable due to claims.
Right. And so if that happens, it is, some boards will become very, nervous about it. It's their own property and it's the property of their friends and neighbors. But if that happens, the step is to not bury your head in the sand. It's to advise the membership as quickly as possible. You need to notify them in writing in every way you can that of the extent to which you were unable to secure the necessary coverage, so they have an opportunity to go out, try to find their own, or do whatever they can to mitigate those damages. And in those situations, that doesn't mean that the association is negligent. That's not necessarily a statement of that. It's just saying we are in the situation, and if you can communicate that effectively to the membership, you mitigate those damages to them.
In the state of North Carolina, small condominiums can always go to the NCJUA, the North Carolina Joint Underwriters Association, and get a policy. But NCJUA will only insure up to $3 million. So any association that has higher property values, it becomes very difficult, and it is very, very expensive to find coverage, if at all.
Mhm. Okay. So now we've sort of talked about, how this is going to happen. And in most circumstances, the obligation to fix is going to be on the association to repair anything that it covers, unless the documents say that the association is simply a trustee of the funds. So there's sort of that two-way of ways the language will come out. Sometimes it says the association is obligated to file claims, to recover the funds, and then distribute those in accordance with the declaration. And they may break that out pro rata for common element damage or for unit owner damage. And in the other situation, sometimes they do have the obligation to rebuild, and that's generally in the stacked units. So in that situation, the association goes inside the units and does the necessary repairs up to whatever limits would be. And that might include up to the betterments and improvements. That might be up to the unfinished wall surface, or that may be the finished wall surface. It really just sort of depends on how the language is written and how that coverage is. And I frequently will get questions from boards that don't, and I know Andrew's going to talk about not wanting to file a claim, but boards who want to simply give the money to unit owners and allow them to rebuild. And that is not a good idea. Perfect example, a couple of weeks ago, the association had a claim, had promptly filed that claim, and had secured funds. And I think it was $25,000 to replace some drywall and flooring within a condominium unit. Was paid by the insurance company. The association got that money and then gave it to the owner, who promised to make the repairs. Well, they put some drywall up, but it wasn't the proper drywall for fire rating. And so apparently it was, basically paper mache. And when it came in to be inspected, myriad problems had resulted. The firewalls were unsafe, and now the association's looking at making those repairs and paying for it out of pocket this time. And the insurance company has fulfilled its obligations. So that's why in these condominium situations where we do have the obligation to rebuild, we need to go in there and be in charge of that. We don't use owner vendors. We don't have owners sign contracts. These are our contracts because we have an ongoing obligation to maintain them. And that's really important that you keep that sort of privity of contract and that direct relationship between the association and the maintenance there.
Let me just expand on what you just said, is that the association received money from the insurance company. Whenever an insurance company sends money, that there's been an exactimate or an estimate done for those repairs. If those repairs are done and to the letter of the law, there is money left over, that money, even though the covenant said, it should be distributed among members, that is not the legal thing that should happen to that money. To the letter of the law, that money should be returned to the insurance company. That will help lower the claim. It doesn't happen every time, but when a homeowner does that and just and puts up the paper mache, well, that is definitely not legal. I'll just put it that way.
Right. And is that almost taking the money off under false pretenses? I guess you could open up to a fraud claim or something like that.
Yeah.
I've never seen that exact situation. So when the association comes in and say it has to fix this everything, and it deals with prompt mitigation of damages, how do you recover that money? How do you figure out that? Depending on the governing documents, there may be an opportunity to charge that amount back to the benefited unit owners. And I know that this is an issue that comes up all the time, and I'm sure Andrew deals with it too, is that generally the documents allow us to charge that back to the owner of the unit that was damaged, not the owner of the unit that generated the damage. So say I live above Andrew, my hot water breaks, and it causes massive water leakage down into other units. Well, he is say his unit needs to be repaired. He is the one who generally can be charged for that, because the documents will say we have the right to charge benefited unit owners. And he is the benefited unit owner, not me. That does seem fundamentally unfair to a lot of boards of directors, and they want to argue about that. But that is how most of those documents are written. And then it's my understanding that the owner whose unit was repaired and who may have had to pay a deductible or had to pay something else will be able to file that under their policy. And I know you're going to get to that, but that's sort of where that issue comes in. There may also be sort of pro rata obligations. If multiple units were damaged and there are certain amounts that are not covered either with a deductible or for whatever reason, then the board of directors may find itself acting almost like a judge and jury, figuring out how to break that out. And we try to really make sure we have concrete evidence to base this. For example, if it's, easily the cost to repair these two units 50-50, we know how to do that. Sometimes we have to charge it based upon their unit percentage under the documents. There's some strange situations where that will come in, but we really try to get a good idea of the cost of the repairs and how much is attributed to each unit or to the common elements and break it out that way. And that may mean that the association does keep a portion of the cost of repair as a common expense for anything that was done to a common element or limited common element if the documents provide for that. Thought I had my pictures in here of this next area. So it becomes a little bit more complicated sometimes when we are talking about limited common areas, areas like decks and balconies and windows and doors. And that's where the whole issue of maintenance versus insurance comes in, because a lot of times these areas may be damaged, and there becomes a question of whether or not their damage is the result of long-term neglect or failure to maintain, or if there was an insurable event. And with water, that can be very difficult. If there's a huge storm and a giant water event or a pipe breaks, that's a clear and concrete incident that would give rise to a claim. Where it's a slow leak, a pinprick in a pipe in a wall, or where there's something else that was slow and steady and deteriorated over time, it becomes much more difficult. So when someone comes and says they have a water damage issue, the first thing is to decide, was there an accident or an insurable event that would give rise to an insurance claim? And you talk to your agent about that. Generally, Andrew, I guess that's a discrete event that can be pointed to in time or a series of events. Is it something like that?
Yes, absolutely. Can you go back one slide?
Yep.
Because this picture of the four.
This is the one that skipped over. My apologies, everyone. Thank you.
Well, this one, we could do our whole presentation on this picture, right? Because one of the things I want to make sure that everybody realizes, the governing documents is the written contract that the insurance is designed to follow. So when we have a maintenance section, that is completely separate than the insurance section. They never touch, they never are affiliated, nothing. There's either insurance section or the maintenance section. They're not affiliated at all. So when we look at these four pictures, the top left is a hot water tank. Hot water tanks, of course, they burst. They're on the 15th floor, and that continues to run till it hits the first floor. Now we have 15 units affected. Well, an association is always recommended to do as much as you can to recommend preventive maintenance. Preventive maintenance is to replacing the hot water tank, draining it every year, flushing it out, and making sure that there isn't any slow leaks. It is very difficult for an association to make a unit owner change out a hot water tank. That is not the responsibility of the association. So the association, the board may have sent 15 letters, change your hot water tank. It is old. It is maybe original from when the condominium was built 20 years ago, but somebody just refuses to replace it. Well, as Harmony and I would agree, that's not very smart. It is the opposite. But if it bursts, regardless, it is still a duty to repair the resulting damage. The hot water tank would not be the responsibility to repair of the association, but all of the resulting damage would be. So with hot water tanks, we need to do is preventive maintenance as much as we can. If we can put water alert alarms on either the water flow going into it or a water sensor under it, is very helpful. The picture to the right is a window. And as you can see, that window has its broken seal. When we have hurricanes, high winds, wind-driven rain is not a usual covered peril. So that means wind has been blown around the seal or the edges of that window. Well, an insurance company looks at that as maintenance. Is that a properly caulked or maintained window should not leak around its edges. To make it a covered peril, a hole, a tree branch, a brick, something has to cause the hole, and then water comes in, then it would be most likely a covered peril. The bottom two slides, those are maintenance issues, possibly construction defects. Those are not covered by insurance.
Right. And thank you for pulling me back to this, because I had a couple of comments I wanted to make about these. The bottom two slides are from the same older condominium in Charlotte. These both show the results of long-term deterioration and damage. The slide on the right, the flooring is a result of a combination of termite damage and water coming up from underneath. And I don't know if you can see it, some really poorly sistered joists. Then we have a sunroom that was basically closed in after the original building had been constructed. And this was an interesting situation because the association has attempted to not insure any improvements constructed by the unit owners. And so that while the condominium does have a master policy on the buildings and the exteriors and everything like that, this is not covered. And so this section has sat like this for many years, unrepaired, because there's an ongoing dispute between the unit owner and the association. The unit owner believes it's part of the condo and should be maintained and insured and repaired. Going to the hot water heater, I have had 2 condominiums in the last year who have adopted amendments requiring yearly inspections and or putting alarms on the hot water heaters. And this is something that it took a lot of work with the membership to get them to agree to that. But ultimately, we had enough scary stories and the loss history just got so high that we were able to do it. So once a year, someone gains access to the units and goes in and checks that everything is working pretty good and makes sure that that little monitor is on there. If anyone interferes with that, they're subject to enforcement from the association, and they're certainly subject to some pretty, draconian fines ongoing and all of that, including all of our costs there. But even then, we'd still have the coverage for it. So that's why we felt it was necessary to go after and do those amendments. And like I said, it was something that it took the membership a while to get on board with. But I find in the practice that amendments that are designed to hit people who did bad often will pass because no one thinks they're the one who does bad. They'll all think it's their neighbor.
In Harmony, that is such a great story. A good insurance agent will take that and take it right to the insurance carrier, and it will have an effect on the insurance premiums this year and going forward, because it's showing that it's a proactive board. And an agent that is just quoting, you've got a board of directors. This is a message to you and the managers. Give your insurance agent a good story. Be a proactive board. Be out there, making recommendations on preventive maintenance, because the better the story and the more active you are, it does help the premiums. It helps the insurance company. It helps the agent find you the best possible insurance that they can.
Yeah. And again, we looked at various sort of specific areas, some of those limited common areas, decks and balconies, windows and doors. you're going to often have owners complain of problems or want to say these are insurance issues. It's always important to look at it and say, is this an ongoing maintenance issue? Is this some just deterioration over time? There is no carefree living, despite what people say. Everything is going to require some level of maintenance. And if you have to look at that and decide, is this something that simply has to be repaired over time? It doesn't mean that the association has failed in its maintenance obligations, that a window that's 25 years old needs to be replaced. And that's going to play into the possible insurance claims and whether or not there's responsibility. There's often a very different responsibility for something that needs to be maintained, repaired, and replaced versus when there is an insurable event. And so you have to remember that. People will say the association has to maintain it. That doesn't mean we insure it or how that works. So it's completely different.
And, of course, the insurance companies are always the bad guys looking out for themselves. I know it. Well, one of the things in regards to those maintenance issues, if there is a water leak and it can be proven that it has been going on for more than 14 days, the insurance company has the right to deny that claim as it is a maintenance issue. So just be aware that if you see water, treat it like it's smoke and act, because it has to be taken care of as soon as possible. One of the questions, in that bottom right, you showed that picture of flooring. One of the things I do want to cover, because there was a great question asked. With condominiums, they have the right in the insurance section to not include improvements and betterments. Well, what improvements and betterments means is that when that condominium was originally built and turned over to the first owner, that was the original plans. And so that is the original specifications of the association or of that unit. Over the years, people have come in and they've changed out the flooring, the cabinetry, the countertops, and done improvements and betterments over time. So we'll use the question, and I'll use it as an example, is flooring. Let's say the original flooring had carpeting and linoleum. And what you've done is you've gone in and put in cork flooring. Now your flooring is at a $30 per square foot replacement cost, where the insurance company at the original linoleum and carpet may have been just $5 a square foot. So the association will have a duty to replace that floor or have an allowance, however it worked out during the claim. It may be an allowance of $5 a square foot, or it may pay just $5 a square foot and put carpeting or linoleum back. That difference of the improvements and betterments, the allowance would be $5 for the original carpet or linoleum. The cork flooring was $30 a square foot. The individual unit owner will need to insure that particular improvement and betterment for a minimum of $25 a square foot. Hopefully that answers the question of improvements and betterments. Flooring is absolutely one of the biggest parts of it. And so if there has been any upgrades in the flooring, if the policy or the governing documents excludes improvements and betterments, it's not covered. And so I just want to make sure that.
And let me just say real quick that that's the kind of thing that association members just really need to know. Sometimes the documents are not incredibly clear as to whether or not in the event of reconstruction, we'll be reconstructing to the original condition, the laminate countertops, all of that, or are we going to be putting back your Carrara marble if that's damaged? We have to know the difference in that. And that's something that you can look at with your attorney and your manager to come up with that, and your insurance agent. And then you need to communicate that to owners, because it's too late after the fact for them to realize, oh my God, I didn't have enough coverage.
Do not hesitate to have your agent and attorney help with that, because the three things that every unit owner needs to know is A, how can they get a certificate of insurance for themselves or their lender? Second is what is the deductible? And thirdly is what the heck do I need to insure? My own unit has to be clearly conveyed. Yes, they have a duty to read the covenants, but it does help prior to claim that the board of directors and help communicate that. It just makes it's never painless at time of claim, but there's less questions and everybody knows what to do, and there's a path that needs to follow. We have this screen right here in regards to deductibles. Well, as Harmony said, that the deductible is the very first part of the damage that is not going to be covered by insurance. That has to be handled somehow. It's determined by an attorney interpreting the covenants on whether it can be assessed back to the unit owner, how it's assessed back to the unit owner, whether it's from the originating unit, percentage of damage, or equally divided among the unit owners, or fourth, if it's going to be a common expense, because some governing documents make all deductibles a common expense, which I think is the worst thing. You want to make sure that deductible can be assessed back to the unit owners, because you want them, I always say this, is that you want them to have skin in the game, that they do have a responsibility, and that first bit of the claim, which is deductible or retention, is the responsibility of the unit owner.
Andrew, let me butt in real quick here and say, I've had a number of boards tell me over the years that they, as a matter of course, chose to not charge back that deductible where it was discretionary because they felt it was just adding insult to injury. And I'm always concerned about that, because while I can appreciate why a board wouldn't want to go to someone whose life had been turned upside down with a claim and tell them you also owe us $5,000 or $10,000, then the issue becomes, is that consistent with the fiduciary duties to everybody else? If I live in that condo and that's what the language says, I want that to be assessed back against that owner. I don't want to pay it either. And so I think it's important to look at whether the language requires you to assess it back, whether it's discretionary. I hate the discretion section. And if it's going to be discretionary, come up with some criteria. I don't, whatever they are, and use those consistently, because we certainly don't want a situation where, Mary got assessed and Bob didn't. And maybe it's because Mary knows, Fred. So that just becomes a nightmare. And then your attorney is trying to draw, a family tree of relationships and find out why this was done. Come up with a consistent policy and stick with it.
Yeah, that consistency is everything. You said it. You nailed it right on the head. With the deductible, because these two right here, deductibles and the HO6 and other unit owner policies, we're going to be talking about them interchangeably right now. We are going to assume that the deductible is assessed back to the originating unit owner's account in my example right now. Okay. We're going to use $10,000 as the deductible on a water damage. It affects many units, but we're going to assess it back to the originating unit owner. How does the originating unit owner insure for that deductible? Well, on an HO6 policy, now remember I said that the deductible and retention is the very first part of that damage. It's structural, it's property damage. So on the HO6 policy, the unit owner will want to have dwelling A coverage, which is actual property coverage. And under this dwelling A property coverage, they will want to have minimum of the $10,000 for the deductible in property damage. They will also want to include any improvements and betterments that may not be included on the master policy. And also, if there are any exorbitant, and that is a non-technical term in insurance, exorbitant improvements. I have only seen Egyptian tile once, and it was in a bathroom, and it was a $200,000 improvement in a condominium for a bathroom. that is something that I would insure separately on my own HO6. It looked like Tennessee Fieldstone to me. I wasn't all that impressed, but what am I to know about Italian or Egyptian tile? It did look very nice, but those are the things on that dwelling aid coverage for property is to cover the deductible, improvements and betterments, and anything out of the ordinary excessive property coverages can be added to the HO6. So at time of claim, we have the incident that's going up against the master policy. The unit owner has their $10,000 that's just been assessed to them, to their account. They place a claim immediately on their HO6 policy. The HO6 policy would respond for that deductible because it's property damage under the dwelling A part. The unit owner would be responsible for their personal deductible on that policy. HO6 policies have small deductibles as low as, probably $250, but it could be up to $1,000. You can even go higher on your personal, but that is the choice of the unit owner. The deductibles are very easily covered on the HO6 policies. And it's highly recommended, the better that it's communicated when an association is forced, due to from the insurance company or history of claims, that the insurance company comes back and says, we have to raise your deductible, you don't have a choice. That information has to be immediately communicated to the unit owners so they can affect or adjust their own personal HO6 policies. One of the things I want to talk about in deductibles is for the board of directors on the master policies. Deductibles truly help with premiums, but also if you have a very small deductible, say $1,000 deductible on a condominium policy, I personally think that is too low. You're inviting multiple claims and you are risking your insurability due to your loss history. Loss history isn't always affected by size of the claims. It is affected by the repeated water claims. If you're showing that you have a history of bursting hot water tanks, that is bad. The insurance company will assess this and show that you are a bad risk, and they are either going to raise your premiums dramatically, non-renew you, or not offer you a quote. So within the deductible or retention for the master policy, I would make it as high as reasonably possible. Minimum of 5,000, 10,000 is also, I believe, reasonable. The deductibles can also be suggested by the insurance companies due to your loss history. The loss history could come from, as we said, hot water tanks, HVAC drain lines clogging and not being maintained, but the resulting damage is still covered by the master policy.
Are you seeing deductibles higher than $10,000? I mean, I'm hearing about ones 20,000, 25.
Yes, it is becoming more and more common. What we're seeing is $25,000 deductible on hot water tanks, $10,000 per unit for water damage. Mm-hmm. It is getting very specific on water because fire is devastating and life-threatening. It is worse, but water is way more common. Yeah. So the insurance companies are reacting by showing different types of deductibles. They can do deductibles on hot water tanks, fire sprinkler systems, where they will do a per occurrence deductible on a fire sprinkler system. They will do a per unit fire sprinkler system leak. They can do it by per buildings. They can do it by percentage. it is the insurance companies are getting very creative, but also work with your agent to use these deductibles to manage your risk. Because if you can protect your loss runs, it's your loss runs, that's your claim history over the last 5 years. Look at it like your driving record. You have a bad driving record, your premiums go skyrocketing, and you become become uninsurable. It's same with your loss runs on your condominium. The higher the deductible, it will eliminate smaller frivolous claims and protect those loss runs as absolutely as best as possible. But part of your risk management is, as Harmony just said, she is seeing higher deductibles. Well, what that does with the higher deductibles is keeps you insurable. It'll hopefully make sure that you don't have claims for a number of years to bring you back into reasonable premiums for your type and age of building. And so having those higher deductibles can help manage the risk over long periods of time. Please do not hesitate to throw questions into the question box. I did say it earlier, but I just do want to reiterate this, that at time of claim, that the association has no duty to the individual, their living expenses, where they're going to be displaced, their private personal property, movement of that personal property, storage of that personal property has nothing to do with the association, and they do not have a duty to pay for that. That is all covered by the HO6 has that, which is loss of use coverage.
Hey, Andrew, I want to clarify one thing that you're talking about with the deductibles, but this is all very document specific, correct? So if a unit is insured up to 100%, the replacement of the building, is the deductible part of 100% of the building?
It is. Yes, it's part of it. It's got to be calculated into that 100%. But that deductible is.
It will never be paid.
Right. It'll never be paid. The insurance then is, we're talking about the insurance deductible. It's not.
So the bill back process is I think specific to each unit or each condominium.
Absolutely.
Something else that we see within condominiums is there's language within the statute about misconduct and proving misconduct. And you were talking a little bit earlier about failure to maintain, even if the association has given you notice after notice after notice to maintain. Can that be used to help prove misconduct in scenarios where, say, a water heater ends up leaking and it's 20 years old and you've given them 15 notices that they need to replace their water heater? Is that misconduct?
Well, yeah.
Sorry, I'm trying to move to the next slide, which talks about what if the association does not want to file a claim.
Right. And don't let me forget, I will come back to loss assessment because that's an important coverage. But yes, continue on to that. Harmony?
Well, I thought you'd want to address that. I mean, the fault provisions are complicated. We don't like to see the association board sitting in the role of judge and jury, and then it becomes an issue of argument as to whether or not someone was at fault or not. I joke. I said earlier today about the person who tried to flush the cabbage down the toilet. That's stupid, but is it something that's actually negligent and at fault? If someone knows that they are continuing to shove something down a drain and they know it's not working and they're sitting there and doing it repeatedly to cause damage, that's going to give you an opportunity to claim fault. But even then, it's a subjective determination. And so the fault provisions get really tricky there, and many communities don't have that fault language necessarily, or we have some obligation to prove it. I'm fighting right now with some homeowners over whether or not putting large pieces of metal construction equipment down a trash chute is a fault activity. Well, there wasn't a sign that says don't put construction debris down the trash chute. It just said bagged garbage only. So it gets into a pretty silly fight there about some of those issues. I'm going to go back to your other issue here, if it'll load for a sec.
And we will, because the next, we're bouncing back and forth in slides. Don't worry, it's going to keep Harmony and I.
I thought you wanted me to go back.
Yeah, absolutely. Real quick, in regards to loss assessment. Loss assessment, this is a very confusing coverage, I would say, to on the HO6 policy. What loss assessment is designed to cover is that if there is a liability issue that comes against the association and it exceeds the insurance provided, and then there is an assessment equally to all unit owners, loss assessment is designed to pay that. So an example is, of course, an insurance person, all I can come up with is just the most horrific examples, of course, so I apologize. If there's ever a death at the pool and there's a claim, the lawsuit exceeds the insurance, and now there's an additional $1 million that needs to be divided equally by all of the unit owners. On their HO6 policy, the loss assessment is designed to cover that excess where it is divided equally to the unit owners. This is not going to pay for special assessments because you have to replace the roof. It is not going to pay for special assessments for siding or maintenance or any property. It is only going to pay for on the liability side for the loss assessment. And so
this is the point in the presentation when we need to give little shots of espresso as you start talking about that.
Right, because it's, yeah, absolutely, I'm with you. Ben also brought up earlier in regards to for the master policy, there are a couple of things that every master policy should have. And one of them that he brought up was ordinance and law. Ordinance and law coverage is if there's a total loss to a building, and from when that building was originally built to today's date, when you're trying to rebuild it, the building codes locally, statewide, and federally have changed. Now that there's an increased cost to rebuild because you now have to bring that building up to today's code. You may have to install a sprinkler system. You may, of course, firewalls have changed, insulation has changed, HVAC has changed, elevators have changed, sprinkler systems have changed. These are the upgrades that if you do not have this coverage or this endorsement on the ordinance or law coverage, the insurance company is not going to pay the extra cost to rebuild. And that will be paid for by the association. And so that is a very, very important coverage is ordinance or law for.
Or is there a frequency that a board really should be talking to their insurance agent to say, are we where we are? Because I know boards will ask their attorney sometimes, or they'll ask the manager, but we're not experts on this. We can look at the documents and look for special words, but we need to get that direction.
Well, Harmony, nobody loves you more than I do. I'll just put this out there. But when an association calls their insurance agent and says, hey, will you come to a meeting? There's not a charge for that. The insurance agent gets paid a commission. And so use them as a resource. Your agent should be very much an expert in this little section of the insurance. Have them come. You better be meeting with your agent minimally once a year as the insurance renews, but call them anytime that there is a situation, questions, concerns. Use your agent. They are your resource. They have a duty to the board of directors. Use them.
And I tell people that all the time. They want to call me and I charge them. And I don't know what I'm talking about. So I say, call your agent. You're already paying them a lot of money under your policy. And if they don't want to talk to you, or if they're not responsive, if they're not giving you the information you need, that's an issue for you. That's a customer service issue. So,
and many times when the board or the manager calls me, please call my friend Harmony Taylor. This is one for an attorney to answer, because I only play one on
kickbacks to each other on this.
That's right.
Okay, I know we're going a little long, but we did definitely wanted to address the issue of what happens when an association doesn't want to place a claim, because God, that happens more and more. And I'll let Andrew talk sort of about the insurance aspects of that. I'll say that from a legal perspective, if an association has a master policy and it is obligated to insure, that comes with an obligation to pursue claims that fall under that policy. And I have, within the last week, had boards tell me they just could not place that claim for various business reasons. There are occasions where an association will choose not to file a claim. It's very small. It's only going to be, like $1,000 of damages over the deductible, things like that. Or they absolutely know that it's not going to be covered, and there's no reason to reach out to the agent for a long-term maintenance issue. But if you have that coverage and there is a claim that would fall under that policy, the board of directors is obligated to pursue that. And if they don't, there is significant liability to the association, and your focus is on the wrong thing. If the problem is you've got too many claims, too much of a loss history, then you need to focus on what's causing that problem in the first place. Do you need to put in place some protections to stop all these hot water leaks? Maybe we need to have some inspections of that. Do we need to raise the deductible? Do we need to add language that shifts more of that responsibility to unit owners? All of that, all of those are reasonable responses, but refusing to file a claim simply opens the board of directors up to litigation. And depending on how it's been handled, the association's insurance carrier may not pick that up and deny that for not proceeding appropriately. I'm not saying this to scare boards. Again, I think there are a lot of opportunities, honestly, in the insurance area to really fix your association and get it operating more smoothly, especially in condos. There are documents that need to be updated and just some new procedures put in place, but just ignoring the claim and refusing to file it because you don't want to or worried about that claim history is just not an option.
And in regards to water claims, I always will recommend that they place a claim because of future claims that may come out of the same incident or occurrence. One thing that we have seen a number of times is that the remediation company has come in, done the water removal, done the repair, but come to find out in the future that the water wasn't all gone, that there was soaked insulation, for instance, caused mold, and now there's the unit owners having respiratory problems. If that claim was not placed, those future claims that come in for the same occurrence aren't going to be covered. So it's definitely, if you place the claim, if it's above the deductible, place the claim on water.
A couple of questions, Andrew. You talked a little bit about dwelling A coverage. And is there a way to determine whether an owner has dwelling A coverage that may address an issue that only affects their one individual unit?
Well, the only way to tell is if you see a certificate of insurance for the policy itself. It will write on the certificate of insurance from an individual homeowner. It will tell you if it's got dwelling A coverage. Dwelling A coverage is it's, for lack of a better term, it's a blanket coverage. It's for a dollar amount. It's not for a specific item. When you have dwelling A coverage in the amount of $25,000, it doesn't specifically say that it's only covering carpet or only covering the cabinetry. It's a blanket pile of money for $20,000. Does that answer your question?
Yep. So I know we're just over an hour, maybe go another 15 minutes. I don't know how many slides you have left, but I was thinking of running through a couple of scenarios.
Oh, that's perfect timing, Ben, because we are at
excellent.
questions.
Well, in lieu of the questions, we only had the one that came in right now. So please, if you have other questions, feel free to ask. But I want to run through a few scenarios. So I mentioned earlier about there's a toilet leak in the unit, and it only affects that one unit, but the flooring is damaged. What do you do? Is that an owner claim, B, condo claim, or C, a maintenance event?
Well, let's make sure that it's a sudden and accidental leak, okay? We'll make sure it's a sudden and accidental leak. It's not a leak over time. That I would say that the insurance, if there's an insurance duty to insure that physical property, that should be assessed, go on to the master policy. And yes, an insurance claim should be made.
So the wax ring on the same toilet is old and leaking, and it damages the unit below. How is that handled? Is that maintenance or insurance?
Again, if it's sudden and accidental, it's immediately noticed. But if it has been long-term, because it does take time, it takes time to get from under that wax seal through the subflooring to the insulation, through the ceiling, and then show itself. If that leak has been going on for more than 14 days, the insurance company has the right to deny that claim. Right. But I would place the claim. And when you have with a condominium, you better have a good agent when they're placing the claim. You let the agent place the claim. And everything is a water incident. You let that adjuster go out there and put their eyes on it, because that claim was placed at a certain time frame. You're buying yourself more days for them by the time they get out there. The less descriptive you are, because it's not the agent or the board of directors to say, oh, what this happened is, Mrs. Jones did the wax seal herself and this is what happened. No, you let the insurance adjuster make all the determination on site because they're experienced at it. Don't try to pre-solve this claim before it's placed. It's a water incident. Let that adjuster come out and take a look at it. Right. Because you don't want it denied. If you can help it not being denied, that's the worst case. That is absolutely the worst case scenario, an insurance claim being denied.
And I think, Ben, you're getting to, these issues also, are there unit to unit issues? I want to point out again that the fact that there may not be coverage is not going to be germane in many circumstances to whether or not we got to go in and fix. We'll still have to go in and repair that because it is an area that is insured. The fact that we get the money doesn't mean anything. We're going to have to go ahead and fix it anyway if it's a stacked 47C newer condo. So in those circumstances, we're really looking at language to see, how do we handle that and getting the payments for that. Yep.
To add to Ben's scenario, I'm the downstairs unit owner. Can I sue my upstairs unit owner?
Right. And sometimes you can, if the person has been, engaging in activities that's caused me damage, that would be sort of a tortious interference. But if there's going to be coverage that's going to be primary there, I think that's generally going to preclude a lot of those damages.
So the roof leaks and it damages a unit below. Maintenance or an insurable event that needs to be addressed. And so who fixes the ceiling in this case? The floor is not damaged right now.
This is my bread and butter. How about you add to that a dead bird? A bird crawled up into the pipe that lets the water run off from the roof go, and it died in there, and we didn't find the bird for a year. Well, we don't go looking for dead birds. And so it becomes an issue of what is the reasonable level of maintenance there? We spend a lot of time arguing about what needs to be done. If the roof looked fine, is that enough? Are we supposed to go up and check it on some basis? Andrew once admitted to me at a conference, he has a personal notebook at home of all the inspections that have to be done on one's home every year to be on top of everything. And it's probably checking every connection and fuse box and everything like that. Well, nobody else does that. And no association does that. That is where certainly it's great to have your maintenance policy in place. Your manager says, we send somebody out once a year to eyeball it, or maybe less, depending on the situation. But you want to know what that is, and it's going to be a very case by case basis. And just because something leaked, just because a roof leak didn't mean that the association was negligent in any way. I mean, things happen. These leaks just happen, and everything looked fine until they don't.
The only way that that's going to be the assurance side, the only way that that is going to be covered is if there was a sudden accidental hole created by a tree branch, hurricane tore off shingles or the membrane roof. If that water just came in without damage, it's not going to be covered by insurance.
Well, we had a seagull dropped on a roof in a fight, knocked off a little piece of the roof of the chimney cap and let water in. Well, that was a sudden and unexpected event.
Another scenario, first floor unit. Let's say
water doesn't happen in a first floor unit. I've never seen it. It is always up high and it comes down and goes left and right.
So if you buy a condo, buy on the first floor, right? No, but first floor unit, we get a drain backed up outside that affects
rising water.
So we have not addressed flood yet, but it backs up into the first floor unit. Is that insurable?
Yes.
Insurable.
Sure it is.
But is it insured? Probably not insured.
Well, I think it would
around here.
Now, here's the two things, is that we discussed the term water incident earlier. And this is what you just described. I hope Jared is still on the call because he knows the association that we've dealt this with. It's the condominium in Charlotte. But there's two things. It always depends on where that clog is that causes the leak in. If it is on the street side, that could limit coverages, and then it's determined to be a water sewer backup, and it has limited coverages. If it is on the condominium side, and it's a condominium clog, whether it's caused by the cabbage that Harmony's client or customer client stuffed into the toilet and it made it halfway down the pipe, or a tree root, that water backs up. Now that is a coverage at the full policy limits, and it's truly a water incident. So the placement and location of the claim of the clog, is key. And I would say, yes, it is covered.
And I've had another scenario where the irrigation system ran too long and ended up flooding under a screened-in patio area. I was going to say it was treated as a flood event, and this association didn't have flood insurance, so it wasn't necessarily covered.
Right.
But so water happens all different kinds of ways.
Yes. My favorite and best or worst irrigation, water sprinkling irrigation claim I ever saw was a landscaper went out, was running pipe and tied in the main line to the HVAC drain line. They turned the water on and they started pumping 30 gallons of water back up the drain line into the fourth floor of an HVAC unit. It caused massive damage. And so we can't even get into the contractor's liability. That's a whole nother presentation that Harmony and I will do next week.
We will reenact that.
So, well, I'm surprised we haven't had more questions, but any maybe takeaways from today's presentation that you'd like to leave remaining
Yeah,
participants?
let me just say mine, because I've got to jump on a hearing over a water episode in about 15 minutes. Know your policy and know, and by that, I mean, know what you cover. Boards of directors are always asking me, saying, well, let's look at the policy together. And I say, the first thing we need to do is look at your documents. The policy is going to be a generic North Carolina policy that's written for every community. It's not, there's nothing specific. If you have a question about coverage, you look at the documents. So know that. Again, board members are incredibly busy. You have your own lives, careers, and other things that are going on. But take that time to look at the coverage and talk to that agent. Those are my main two takeaways, because they are incredible resources. And if I had a penny for every time somebody says, you know, I actually talked to the agent, now I understand it. Great. It's not, certainly won't hurt the feelings of your manager or your attorney. We'll be happy to see you do it.
You nailed it on the head, because that was the one thing I was going to say, is that your governing documents are the written contract that tells the insurance how to respond. And so, Harmony, thank you very much. The other thing is, again, use your agent as a resource. Why not? There's no cost to it. And then you'll be able to determine if you've got a good agent or not, and then make a business decision that way.
Yeah.
Great. It was great to see you guys.
Well, yeah, thank you
Everyone.
everyone for participating. Harmony, Andrew, thank you. And I'll just say we're doing another webinar next Thursday afternoon, same time, 4:30 on amendments. So if you have interest in learning about how to make successful amendments, so if we want to push our insurance amendments, we can certainly try and do that. But we do hope you will join us. So please, if you haven't already registered, sign up. So thank you again, and I guess good night.